I think my dreams were, outweighed my fears. And I think people get caught up in their fears outweighing their dreams. And I had these big, big dreams, and my fears weren't going to outweigh my big dreams.
Yeah, love
and so
that.
I had the courage to focus on my dreams and not my fears, because my dreams were bigger than my fears. And I think some people, it's their fear that's bigger than their actual dream. But if you can dream really, really big, fears are only a little hurdle that you just need to jump over.
Welcome to the Get Invested podcast, where we share great conversations with experts from all walks of life to uncover their secret know-how on where they invest their time, their skills and their money, and the benefits that this has created. You see, the truth is that everyone invests. Every minute of every day, we're investing our time, our skills, our energy and our money in something. Some of us are investing consciously, some unconsciously, sometimes for good, sometimes for bad, and sometimes for no impact. Get Invested will help you to start living by design, not by default. I'm going to help you to make it happen, not let it happen. You'll hear the top tips on how you can live with conscious intent so that you can live more, work less, and leave a living legacy by investing now. Listen to the show to discover the top tips on how to get started, make the most of your investment journey, and ultimately to be living your dream, not someone else's. More episodes can be found on iTunes or at bushymartin.com.au/get invested. Thanks for listening, and now let's get invested. Hi, freedom fighters. Do your dreams outweigh your fears, or do your fears outweigh your dreams? If your fears outweigh your dreams, which is the case with many of us who are stuck in our illusionary comfort zones and trapped on the treadmill, how can you overcome your fears to realise your dreams? Well, the first thing is to make sure your dreams are so compelling that you'll do anything and overcome any hurdle to achieve them. So you need to get crystal clear on what your dreams, your why, and your vision for your life are and how you want to live. Now, very few take the time to create a magnetising picture of your ideal life, your perfect day, week, month, and year, what you're doing, where, when, with who, and how it makes you feel. So if you want a very easy to follow way to do this, just grab a copy of my book, The Freedom Formula, which takes you through how I did it and how we continue to do it. The second thing is to reduce and overcome your fears. Now, that's easier said than done, I know. But I believe a healthy level of fear is actually your friend. It's there to protect you, not by stopping you from doing anything, but to make sure you're aware and prepared for what you're doing. But more importantly, it's a sign that you're moving out of your comfort zone by learning and growing. In my view, doing nothing in our rapidly changing world is actually far riskier. Playing it safe is the new risky. But more on that another time. For me, fear normally flows from a lack of knowledge. Fear equals ignorance, whereas knowledge grows clarity and confidence. If you understand something, you're less fearful of it because the perceived risk is reduced. And as the world's greatest investor and one of the world's most wealthiest individuals, Warren Buffett, has famously said, I put a heavy weight on certainty. If you do that, the whole idea of a risk factor doesn't make any sense to me. Risk comes from not knowing what you're doing. Now, Warren Buffett is one of my heroes of sustainable success. Why? His approach to investing is based on honesty, values, and long-term timeless principles that apply to anything you invest in, be it yourself, your job, career, business, property, or shares. So let me share with you a little of his inspiring story as the Oracle of Omaha. Now, Warren was a C-grade average student at school, but his financial career began at the tender age of just 6, selling gum and Coca-Cola and delivering newspapers. He bought his first share at age 11 and now believes he started too late. And by the time he was 14, he filed his first tax return, having saved $1,000, and about the same time, he bought a small farm with his savings. Rolling forward to the age of 26, he set up his first investment partnership for family and friends, and he put together $174,000 at that stage. And recently, now at the age of about 87, his personal fortune was $84.7 billion, and 99% of his wealth was earned after he turned 50. And this is from his steadfast belief in the magic of compounding interest over the long term. To me, Buffett proves that nice guys can finish first. Over the years, he's treated his investors as partners, acted as their steward, and championed honesty as an investor. And his goal is to keep helping others invest until the day he dies. In all of this, he's my role model. His basic principle is to behave according to his inner scorecard, doing what he feels and knows to be correct, rather than using the outer scorecard and measuring himself by the opinions of others. He's indifferent to the trappings of wealth, and he's defiantly unsophisticated. And his rules of investment are very straightforward. Don't invest in something you don't understand. Be in there for the long term, and build in a margin of safety. Now, when you hear that, it's easy to think, well, surely anyone could do that. So why is there only one Warren Buffett? The answer is that it demands a resolute independence of mind and a level of informed courage, patience, persistence, and resilience that eludes most investors in today's instant world. Now, quoting again from my book, The Freedom Formula, here are some of my favourite Bush Buffettisms. Firstly, focus on long-term value. Second, ignore the day-to-day fluctuations of the market. Third, include a margin of safety to minimise risk. Fourth, secure a well-chosen portfolio based on reasonable prices, not bargain prices. Fifth, reinvest your returns. Sixth, be financially and psychologically prepared to deal with short-term market fluctuations. Seventh, be able to say no unless all the facts are in your favour. Eighth, be content to hold any investment indefinitely. And 9, don't try to analyse or worry about the general economy. And my favourite Buffett quote is, wealth is the transfer of money from the impatient to the patient. And Warren Buffett is also the hero for today's special guest, who himself is a very successful investor. John Mihailidis is the founder of Project My Profit, an online program teaching people how to build real wealth investing in stocks. He's on a mission to inspire others to build real wealth over time by investing in stocks based on his own personal success in becoming a self-made millionaire. In 2006, for the very first time, John picked up a book about investing by Warren Buffett and read it cover to cover. By the time he finished that book, he was inspired to become just like Warren and build wealth by investing in stocks so that he could retire early and live financially free. And in just 12 years as a self-taught investor, he's been able to make over $4 million running his own family fund. Now, when you talk with John, the first thing you notice about him is his genuine humility and his very down-to-earth nature. John's not a flashy millionaire that let his wealth go to his head. He's just a guy who describes himself as an everyday Aussie that's really passionate about building wealth with stocks. But why is John so passionate? Because he's cracked the code and developed a very simple formula that works. His investment strategy has stood the test of time and continued to work for him and his family consistently for over a decade now. And what I love about John is that unlike a lot of investors who are polarised as either property or share investors, John is an and investor. It's not property or shares, it's property and shares. He's embraced both at different stages of his wealth journey. He's created multiple income streams on his way to his current lifestyle, using his businesses to leverage into property, to build his nest egg, and now using shares and other investments to fund his ongoing lifestyle. And we talk about all of this during today's deep dive conversation. If you'd like to get a copy of John's ebook dedicated to Warren Buffett, just listen carefully and then email me at bushy@khgroup.com.au. That's bushy@khgroup.com.au with the name of the Warren Buffett book that John recommends, along with the number of pages he mentions it contains during our engaging conversation. And if you like what you hear from John and would like to know more, come and join us at the upcoming Wake Up Adelaide conference on the 21st and 22nd of November, where you'll get to rub shoulders with him up close and personal, along with 17 other groundbreaking world-leading lifestylers who are driving the Wake Up movement to help you find your spark and discover a smarter way to work and live. There aren't many tickets left, so jump on www.wakeupadelaide.com now to avoid missing out. In the meantime, enjoy this really enlightening chat with John Mihailidis. Hi, Freedom Fighters. In the run-up to the Wake Up Conference in Adelaide on the November 21st and 22nd, I've got the real pleasure of podcasting with all of the successful people that I'll be sharing the stage with at that awesome event. And today we get to spend rare quality time with a fellow investor who shares my mission to build real wealth over time by investing with intent. So welcome, and let's get invested, John Mihailidis. How are you, mate?
Hi. How are you, mate? You good?
Good, and I still think I pronounced your surname wrong, mate, so my apologies for that.
You were close, that's fine.
Mate, really appreciative of you spending some time with us today, and we'll be sort of digging in deep to your specialisation area around equities, which is something that we haven't dug into at all in Get Invested today. But before we do that, mate, I'd just love you to, in your own words, give us a rundown on who you are, what you do, and why you do what you do.
Well, my name's John Mihailidis. I'm an entrepreneur, and I've started a program called Project My Profit, because I'm on a mission to inspire people to build real wealth over time by investing in the stock market. And so I've created an online program called Project My Profit, where I've created about 135 videos, so people can watch these videos from home. And what inspired me to start Project My Profit was I've always wanted to be an entrepreneur, and so through my journey, we were looking at ways of becoming wealthy, and one of the ways was to invest in the stock market. And so part-time in the last sort of 12, 13 years, I was able to amass about $4.5 million. So I'm self-taught just through reading and following a certain philosophy. And I started to try and teach my son, who was 19, on how to invest. And then it hit me that there'd be so many other people out there that probably would like to learn from someone who's basically self-taught. And so I started the program called Project My Profit.
Yeah, awesome, mate. Well, I'm amassing $4.5 million is no easy achievement, and we will dig into that in some detail shortly. But what would be, I think, really interesting for the listeners to enjoy is your long-term journey to date. So if you wouldn't mind sort of taking us right back to as early as you would like to think of, and take us through what you invested your time, your energy, and your money in, when, what were the pluses and minuses of that, where did that lead you to, and how did that then get you to where you are today? Would you mind us sort of walking through your history on that basis, please?
I think my earliest memory, I've always wanted to be wealthy. I always thought about money. And I remember even when I was about 11 years old, I remember telling my mum one day, I don't know, I think our family were having money issues. My parents just came from Greece to Australia, and I think my mum was upset one day about some money issue, and I said to her that one day I'm going to become a millionaire, Mum, so don't worry. And I remember her laughing at me, and it wasn't laughing at me. She just, it was sort of a little 11-year-old telling her something that probably would never happen, and it sort of inspired me. I felt like my mum was laughing at me. I'm going to show her that one day I'm going to be wealthy. So I even remember from that age that I was really interested in how to build wealth. And then I was really into soccer, and I remember about the age of 16, I got an invitation to go to the Australian Institute of Sport. So I took up the scholarship. I was there for 2 years. I ended up playing at the highest level in Australia. It used to be called the NSL back then, and now it's called the A-League.
Okay.
I represented Australia a few times. And so I was a driven person. Whenever I sort of put my mind to it, I wanted to achieve. And so always wanting to be wealthy. In my early 20s, I remember back then we didn't have phones, so I remember I read an article saying come to a property investment seminar. And it was in The Age. And so I went to this seminar, and it talked about investing in property. So this was my sort of first learnings of investing. And I was so keen that I went off and I started to... So I'm in my early 20s. The first thing I did after that course was I bought a little one-bedroom apartment in East St Kilda. This is probably going back about 30 years now, and I think I paid about $30,000 for it. I accumulated two more, one in Paran and then one in Elsternwick. So I started my property investing. That's how I sort of got going. And I think, as I mentioned before, I'm 55 now, and I've only ever worked for someone else for 2 years of my life.
Yeah.
And that was in my early 20s. Once I accumulated these three properties, I decided that I wanted to get into my own little business. So I purchased a little cafe in Kew in a suburb of Melbourne.
Yep.
I had my mum as the chef, and I committed myself at that age, probably, my sort of mid-20s now. I was doing probably about 90 to 100 hours a week of work.
Massive.
So working 7 days. I remember working from, I think, 5 o'clock in the morning till about 9 o'clock at night, 9:30. Just driving home, going to sleep, going back to work the next day. So at that time, a lot of my friends were going out and, partying, that's what you do. And my philosophy was I wanted to first build my wealth and then enjoy my life further down the track, right? That was just my thought process.
Yeah.
And so I committed to working all these hours. And the business wasn't huge, but it was good for me. But then I had two brothers, and they just finished high school, and they didn't know what they wanted to do with their lives, right? So my parents were a bit worried about my two brothers. So I decided, well, maybe I formed a little company, and what I did, Bushy, I put all my assets in there. So I put my three properties and my business into this company.
Yeah.
I offered a small ownership to my two brothers, but the deal was that they could come and work for me in my cafe, but I couldn't pay them a lot.
Yeah.
So they had a little bit of ownership in this company that had a few assets in it. But I wanted them to commit to that when I did pay them, that we would start this a savings plan. And I remember that every week I would put $600 into this savings plan, and they would put $300 each. That was my two brothers are twins.
Okay.
And that we would build this savings plan, and then we would then buy a bigger business that could carry three of us. There would be enough profits for three of us, right?
Yep.
And they agreed, so we spent 6 years saving all this money. So we ended up buying a bigger business in the city. And from there, we just wanted to grow the company. So we got into property. I did quite a few property deals, which we'll probably go into later.
Yeah.
And then we diversified, into stocks, and we ended up with about 5 restaurants, probably 100 staff, multi sort of property deals that we did. And that got me to where I am today, really.
Yeah. Okay. Interesting, mate. I'm just going to wind the clock back a little bit there, because I'd love to delve into that driving passion that you had at such an early age. It's quite a rarity to see anyone who, you mentioned at age 11, decided then that you always wanted to be wealthy. Where did that come from, mate? What was the driver that got you started thinking that way?
I think it was seeing my parents work so hard. My dad would go to work in the morning in a factory, work till 4:00. He would go into his car, sleep for 2 hours in his car, and then go back and do the afternoon shift in the same factory till 1:00 in the morning. And he would do that for 6 days a week.
Yeah.
And I'm just thinking to myself, that can't be, one, it couldn't be good for you and it couldn't be healthy, and two, it's not how I wanted to do more. I could see my parents struggling for money, and my dad had to, do these hours. And at one stage he got really sick because out of exhaustion, he went to the doctors, and the doctor said, "You're running yourself into the ground." But he didn't really have a choice. They came from Greece, and this is what he had to do. And I remember my mother, Bushy, because they couldn't speak English, she got pregnant, and she thought she was having a baby, and because her English was so poor, it was only the day before, 2 days before she was about to give birth, that she realised the doctor was saying that she's having 2 babies.
Wow.
She was having twins because her English was poor. And so my mum has twins, and then now my dad has to work 2 jobs because my mum really can't go to work, and they were struggling financially. And I think that was a driving force, just seeing my parents struggle, that I wanted to sort of, take myself to the next level and not have to struggle.
Yeah, well, it's sort of jumping forward, because anyone who's achieved the sort of sporting prowess that you have in the very competitive soccer arena to get to represent the country, that would have taken a lot of discipline, patience, and persistence to people talk about talent. I guess my own view is you've got to have some talent, but it's the ability to really do the hard yards to make that work. Can you talk us through your thinking that at that time and the challenges that you went through to actually go from playing local club soccer right through to the big league and then representing the country? I'd love you to share that with us, mate.
Yeah. I think you're right. There was probably players that were maybe more talented than me, but the ones that make it have talent and commitment, and it's the commitment part that some people fall over with, when it comes to even life itself, right? So in sport, I wasn't the most talented player. All I had to be was the most talented player in my position, and I had to be the most committed player in my position. And so I ended up playing in the A-League at 16. So I was one of the youngest players to ever play, at that age. And so I was playing against guys that were 30-year-olds, 6'2", with, tattoos, and I was just a kid. But I was passionate and committed to my sport. Even in the off season, I'd still train 4 or 5 times a week by myself. So it's the commitment part, and that's what life and even investing is all about. To become wealthy is a commitment. You have to be committed to it, on a daily basis, just thinking about it to actually get there.
Yeah.
And sport's no different, So
yeah, it's probably. I often say that sport is a microcosm of life. And there's only 5% of sports people that really achieve the success that everyone wants. And consistently, I see those that they just, it's their every living breath is focused on making that happen. And
so when I went to the Institute of Sport, I was 16. It was like going to the army, Bush. There was discipline, there was commitment, there was, we're in Canberra and we had 2 training sessions. One would be at 5:30 in the morning. And in Canberra, in winter, it's minus 3 or 4 degrees. And we had to wake ourselves up and be on the training pitch at 5:30. No one was going to wake you up. You just had to be disciplined. And I remember we were running around with balaclavas on just to cope with the cold and gloves and so I think the commitment...
You'd probably get arrested for doing that now, John.
Yeah. So, it was the commitment and drive that I learnt in at the Institute that sort of helped me in business.
Yeah.
Having the drive.
So is that again, I'm just really interested in the drivers there. So that commitment, is that something that's just been innate to you, or you just realised early on that, and probably soccer was a great way to instill that quality, because you would have worked out pretty quickly that if you don't have the commitment, it's not going to work. Is that, do you think it's a natural thing for you, and maybe it's a combination of what you saw in your parents, that commitment they'd made to make your life and your brother's life better? Is that where that commitment came from, you think?
I think some people are I think it was a little bit inbuilt in me, but then it sort of really grew by seeing things around me, through, through going through the Institute, seeing my parents struggle, that just grew in me to be committed to now changing my life, and, sort of being better, and taking my life to another level.
Yeah, so...
And at the time, when I'm young, I'm seeing my parents struggle, Bushy, and I'm just thinking, I want to become wealthy to help them, right? Yes. It wasn't even about me. It was like, I want to become wealthy at a young age so I can help my parents not live this life,
Yeah.
Yeah, so it wasn't at the start, it wasn't even really about me. It was about helping my family, right?
Yes. Yes. Yeah, it's a bigger cause and a bigger drive. Yeah, I love that. Tell me, mate, you achieved big success in soccer in your sort of early to mid-20s. What was the light bulb moment that made you start thinking about, right, because you talked about going to that property investment seminar. What triggered that thought?
What happened was I hit the top of my sport. But back in those days, it was almost an amateur, existence. So it was, semi-professional. So you were making money, but really it wasn't going to be enough to lead a good life. So even, when I represented Australia, it actually cost me money because, I'd have to leave work. There was no money involved, everything was paid for to get, the trip was paid for and everything, but I'd give up my work to actually go and play, right? So I could just see at that point when I hit the top of my sort of sport and sort of there was nowhere else to go, that I could never become wealthy doing this. I had to now focus on outside my sport, right? So I started to take my sport. I decided that one day, okay, well now I'm going to play soccer like socially, still at a high-ish level, and now focus outside of my sport and how am I going to now build me and become wealthy, over time. And the light bulb moment was one day when I realised that, I can continue playing this sport at this level, but it's where am I going to be when I'm 30? Nowhere. So I made it. I can't remember the exact date, but I just made a decision that I needed to look outside of my sport now and try and build my life.
And again, a rarity for someone at that young age. Looking back on it now, for someone in your early, probably maybe mid-20s to go, where am I going to be when I'm 30? that's quite revelational for most people that I get to say, but people aren't even thinking that way. So you've obviously always had a fairly forward vision and a fairly strategic approach. Would I be right in saying that, John?
Yeah. I remember Bushy one day, I decided I'm going to now, I went to this investment seminar about property, and the first thing I did, I was so excited. I'd saved a bit of money, and I saw a property that I wanted to buy, so I took my dad with me, and you can imagine I'm just in my sort of early 20s. I took my dad with me to inspect the property. So my dad came along, and I really liked the property. It was in a great location. It was on a tram line heading to the city. We left the inspection. We went home, and I said to my dad, "I'm going to buy this property." Right. At this stage, I'm still living at home with my parents.
Yeah.
And my dad convinced me not to. And I remember we had a bit of an argument because my dad was very conservative and he was very scared. And here's his young son, early 20s, wanting to buy a property and borrow money and blah, blah, blah. And it just wasn't him.
Yeah.
And his own fears, then, he started telling me that I don't want you to do it. So I didn't do it, but I was sort of, angry, right? Because I felt like, I want to progress, and my dad's sort of being so conservative, which is, that's just his personality.
Yeah. So
put me off, and what I think with my dad and my parents, they came from Greece, and that was a huge life risk for them.
Yeah. Right,
to leave their country to come here, and so he had risked everything just by coming here. So he was averse to risk anymore. Does that make sense?
Yeah, it does. If you've made such a big risk, then you want to make the most of it, and therefore that creates a conservative outlook. Yeah, that makes perfect sense. Yeah.
And so what I did was then I went to that seminar, and then I started buying property on my own without discussing it with him.
Yeah. Well, let's go right there, because most people value and respect their parents' opinions, and a lot of us become our parents because that's the environment that we've grown up in. Where did you have the courage to step beyond that? Because we are talking courage here to say, righto, well, Dad and Mum are saying no, but I while I respect Mum and Dad, I'm not going to take that advice. I'm going to go and do this. Can you sort of think back to what you were thinking and how you took that step?
I think because I left home when I was 16, and I went to Canberra and went to the Institute of Sport. I started to become a really independent thinker, and just playing sport at a high level takes courage in itself just to get there, And I just had the courage to. I wasn't, I think my dreams were, outweighed my fears. And I think people get caught up in their fears outweighing their dreams. And I had these big, big dreams, and my fears weren't going to outweigh my big dreams.
Yeah,
and so that. I had the courage to focus on my dreams and not my fears, because my dreams were bigger than my fears. And I think some people, it's their fear that's bigger than their actual dream. But if you can dream really, really big, fears are only a little hurdle that you just need to jump over.
Yeah, fears are normally just a lack of knowledge, in my view. Yeah. It tends to dissipate it. Mate, that's a brilliant insight. What do you say to other people now who are in a similar situation where they're starting to look at investing to improve their lifestyle long term and create the wealth that's going to sustain that lifestyle, but they're surrounded by either family or friends or work colleagues who are saying, "Oh, you'd be crazy to do that." What do you say to those people to say, "Well, stop listening to it and make the plunge"?
I think it's like you said, it's the fear of not knowing. Knowledge gives you power. Power then gives you courage, right? So when you're talking about something like investing and you have no idea about it, it can seem scary, and so you have to invest time to start learning and creating some knowledge for yourself to give you the power, which is the knowledge, to then create some courage to actually understand how things work and how things will pan out okay once I understand what's going on. It's the lack of knowledge and that scares people because they're not sure. That's what I think it is. No one taught me about investing in the stock market. I think I spent the first 12 months reading everything I could, taking notes, hour upon hour, reading articles, and before I even invested in the stock market. So I just tried to build up my knowledge as much as I could before I even started. So I think it's the knowledge thing that people don't get scared about. They're not sure about.
Yeah, well said. Now, just sort of, again, digging a bit deeper around that period where clearly yourself and your twin brothers were doing pretty well. You had the 5 restaurants and the property deals that you'd done. But I'm sensing there must have been another light bulb moment there, because I'm also sensing with the hours that you ended up working, you sort of become a slave to that machine, particularly in the business. And I'd say that because I've been there myself, John, where you build this awesome business, but then all of a sudden you're working for it rather than it's working for you. What happened at that point that you're saying, right, hey, I'm falling into this, and I'm making a guess here, I'm falling into the same old trap. Yes, I'm doing really well, but it's costing me all of my time. Can you talk us through that period and what happened that then sent you in the share direction?
Yes, so we ended up with 5 restaurants, about 100 staff, and I realised that we were growing too quickly. We had grown too quick. And I think, if we talk about some of the failures that I've had, it was trying to become, sometimes people think bigger is better, I ended up with 5 restaurants with 100 staff. And it took a toll, and when you're running 5 restaurants, that are probably open 7 days a week, you're really relying on a lot of people. And I stopped having fun, and it became a bit of a nightmare to try and control this thing that we had grown into, but we just had grown too quickly. And if I've made a mistake, it was that, trying to grow too quickly. And then again, I was working a lot of hours, and I ended up getting divorced because I was committed to my work. So, and once that happened, it was a light bulb moment that I needed to change. So we scaled down. We sold 3 of the restaurants. We kept the 2 that were the most profitable and the better ones.
Yeah.
And I realised that we needed to diversify out of hospitality, right? Because it was just getting too hard. So, and we all had all our eggs in the one basket. So we ventured into property first off, and like I said before, I bought 3 at the start. In my early 20s, I'd already bought 3 one-bedroom apartments around Melbourne. Yeah. But then we got into developing properties. So I bought a house in Northcote, which is probably about 5 k's from the city, and I subdivided the land, and I built 3 townhouses on that block.
Yeah.
With my brothers. So we were using the cash flow from the cafes to reinvest that money. So we never really had money just sitting there doing nothing. So we started this little property company on the side, and we were using the cash flow from the businesses to now expand into property. So we started becoming developers. So we like I said, I built 3 townhouses in Northcote. Then I bought a property in Pascoe Vale, again in a city. I got permits for 3 townhouses there, and instead of building them, I sold the property with the permits.
Yeah.
And as we're going along, we're making pretty good money on each deal, right? So I then took the money, I went to Thornbury, which is 7 k's from town. I built 4 double stories there. It was one big block of land with an old house. I bulldozed the house and I subdivided the land. And I live here now, but we kept all 4. Then we got into commercial properties. So I bought a warehouse in Coburg, again, close to the city. And another mistake I made was I bought the commercial property, but it had a commercial 2 zoning, which just meant that there was limitations to this property for the future on, doing something with it. So I convinced my panel beater mate who was next door to buy my commercial space. So I took the money from there and I went to Clifton Hill and I bought a commercial property there with a mixed zoning. And what that means, Bush, is that I can do anything with that property in the future. I can turn it into residential if I wanted to.
Yeah.
So our plan there was a great location, close to trams, trains, buses, probably 3 k's from the city. I think we paid about $950,000 for this commercial space, and this was going to be our super down the track. We were going to go 6 stories and build about 20 apartments or so on it.
Okay.
But as luck has it, a big builder in Melbourne bought the property next door to me, and they're massive in Melbourne. They're huge developers. And then I get a knock on the door about a week later saying, would I like to sell my property to them?
Yeah.
And so I had this property for probably 2.5 years, 3 years. I bought it for $950, and the developer bought me out for about $2.7 million.
Thank you very much.
Yeah. So then we bought a house in Richmond, which is about 2 k's. Again, being developers, we got permits again for 3 triple-story townhouses. Probably made it over $1 million on that deal because we sold the permit again. It's very hard to get permits in Richmond, so heaps of the developers were hounding me for the permits instead of me building them. And so we've done a lot, but we got to a point, Bushy, where you're borrowing a lot of money from the banks. I was getting pissed off with the banks. Borrowing money was becoming harder.
Yeah.
And so we decided, what other avenue can we take now? So we're still into the cafes. We've got good cash flow. We've built this property portfolio, which is great. What else can we do? And then I remember my brother one day bought me for my birthday a book on Warren Buffett. And I couldn't put this book down, Bushy. Like, it just resonated with me straight away. Like, there was a philosophy. I didn't understand the share market. I didn't know, even where to start, Yeah. I just thought it was these numbers going up and down on the screen, and I had no idea. But once I read this book, it just resonated with me. There was a simple philosophy to follow. And, it was around compounding money, right? Compound money at the highest rate possible using the stock market as the vehicle.
Yeah.
And some of the tenets that Warren Buffett talks about are, circular competence, meaning, just focus on businesses that you can understand, right? Just stay within your circle of competence. Intrinsic value, and what that means is putting a valuation on a business irrespective of the stock price. Margin of safety, like buying $1 for 50 cents. So all these tenets, and it just resonated with me. And because I had been in business, I could comprehend what he was saying,
Yeah.
You're buying into real businesses. You're not buying a piece of paper. So when you buy a stock in a company, you're actually buying a small piece of a real business.
Yeah.
It's not just a piece of paper. So when you're investing, then if you're going to buy into a business, you have to do some research. And just this whole philosophy, and I just thought, this is what I'm going to do. Let's just read up as much as we can and learn as much as we can. And so we opened up our own little investment fund for our family, and we chipped away for the next 3 years, part-time. One of my brothers and me, we probably spent 4 or 5 hours a day just reading and researching on stocks. And we invest in the US. It's just that there's so much more information in the US, and all the big companies, all the great companies in the world happen to sell their stocks on the US stock market.
Yeah.
And so we started this little fund for our family, and whatever money we had, we'd just sort of be putting into the fund there. And like I said before, we ended up with around about $4.5 million over, a 13-year period.
Yeah.
Just, part-time. Me and my brother never got it. We never got advice from anybody. We would just buy our own stocks, but with a long-term view. We weren't traders.
That's important. So let's just to put a bit of colour around it for the listeners, mate.
We weren't looking at a screen for the whole day. We're buying a small piece of a real big business, and we want to be long-term holders. That was our philosophy. Great.
Now, I just shed some light on that for the listeners. Warren Buffett, and you probably have to be living under a rock not to know who Warren Buffett is, but for those that haven't heard of Warren Buffett is arguably the most successful investor to have ever lived. And interestingly about Warren, while he, just like yourself actually, John, was switched on to investment from a very, very early age, and it was a millionaire by the time he was 30, most of his wealth has come after he's 50. So, and what I love about him, just as you've said, is that it's about long-term value. It's not this get in, get out routine that a lot of stockbrokers sort of push you towards because they're making money on the transaction, not on the growth of the share itself. He's smart enough to go, righto, we just need to look at long-term what sort of business is going to do well and why, and then invest in those businesses. And once you've invested in them by buying shares, get the hell out of the way and allow them to do their work. Am I reading that right? Is that pretty much your thinking about it?
You see, Jeff Bezos from Amazon asked Warren Buffett one day, Warren, your philosophy is so easy, why don't people just follow it? And Warren Buffett's reply was, because these days people don't want to get rich slow, right? And that's the key, is that everyone these days wants to get rich quick, and so people, probably don't follow Warren Buffett because, some people don't want to take the long-term view. But the only way you can really become truly wealthy is over time, right? And the number one thing that Warren Buffett uses is compounding money at the highest rate possible, year in, year out.
Yeah.
I think, like you said, at 50, Warren Buffett was probably worth $300 million. And by compounding, what it means is you're trying to earn as much money on your money as you can at a decent rate, reinvesting the profits and never withdrawing money from that account. And so Warren Buffett's example is, at 50, he was probably worth $300 million, and now he's 89, and he's been able to compound that $300 million at a high rate, and now it's grown to $84 billion, right?
Yeah. The interesting thing there that I find about compounding, and again, we both share the same view here, that I think Albert Einstein referred to compounding as the eighth wonder of the world. But what I find interesting about compounding is that it's an exponential curve, and let's face it, no investment goes in a beautiful, smooth curve, but if you look at the long-term exercise, what people sort of fail to remember with that compounding is that if you follow that curve, 80% of the growth happens in the last 20% of the time frame. So the real key there is time, as you've well put. If you take that long-term view, you're giving yourself the opportunity to enjoy that massive growth that occurs in the latter part of the journey versus, and in property, John, I see people who adopt a similar try and get rich quick scheme, and 50% of first-time investors sell their property within the first 5 years because it hasn't, to their view, made enough money. Whereas those who go through the full cycle, just like the share market, go through the full cycle of 15 years plus, have the opportunity then to allow compounding to work its magic. So I think you make a really important point there, that it doesn't matter what you invest in, whether it be your business, whether it be shares, whether it be property, you've got to stay the long term. It's boring. This is the other thing for me, is investing is a very boring exercise. It's like watching grass grow. But people want to see things happen quickly, and they want to see things happen, so they start tinkering with it or making changes, and then wonder why they don't get the results. Has that been the experience that you've seen with people?
Well, exactly. I mean, when I talk about us being able to achieve what we have, it was being committed to compounding. So we created our little fund. We were putting money in there as we went along. Whatever money we could muster up, we put into the fund. But we would never take out any of the profits, and we would never withdraw money out of this fund. And so we allowed. So compounding, as the money grows, it's like a snowball effect. A little snowball at the top of the hill, as it's rolling down the hill, just becomes this huge monster, right? But you've got to be committed to it, and the problem with today is everyone wants instant gratification, and it just doesn't work. And that's why Warren Buffett becomes the richest or the second richest person in the world, because he's stuck to his guns and he's had a long-term view and a commitment to compounding money. That's how. I don't know any other way. I don't know any, day traders that, are up there, in the richest guys in the world's category,
Totally
and that was our philosophy. And a lot of the successful fund guys that I follow in the US, they all follow the Warren Buffett philosophy. They've got their own funds now that they run in the billions of dollars, and their philosophy is the Warren Buffett philosophy. How do I compound my money at the highest rate possible, year in, year out? And in the US, because that's where we invest, I invest in the US, the stock market goes up 75% of the time. And so if you're talking about compounding, let's just use, if I could compound this year at 18%, the following year at 15%, in the third year 12%, well, the fourth year might be -5%. But that doesn't mean I run for the hills now. You have to accept that the market doesn't go up in a straight line. So it goes up on average 75% of the time, but you have to accept you'll have a loss year. And that's just part of the game, I think people get flustered when, one year, I've had years when I've had -5 years, right? There's years where I've done 25% returns.
Yeah.
The last 2 years, I think I did 25% and 26.5%.
Yeah.
But, the year before that might have been -8%. You have to accept, the US market in the last 60 years has gone up on average by 10%, right? But that's not a straight line. Like I said, it could be 12, 15, 18, then it could be -3. But you have to accept that's part of the course. Yeah, and that's where people start getting scared, When they hit a hurdle, they run for the hills.
Yeah, well, I've often said to people, because you and I are very similar in this, before we even look at what people to invest in, I say, okay, what's the end game for you? What are you trying to achieve with this? What's your ultimate lifestyle, and how much does that lifestyle cost? And therefore, what sort of an asset base do we need to create that's going to give you that? And if you're investing for 15 years, you don't start making decisions at year 2, 3, 5, or 6, Because if you've done your homework and you believe that what you've invested in is going to get you where you need to over 15 years, why do you start buggerising around with it halfway through the race? So how do you, because this is a really important point, I think, we are so deluged with negative fear-scaring media these days who just leap on anything and blow it out of all proportion based on what's happening at that minute, not what's happening over the long term. How do you help the people that you're teaching and guiding to invest? How do you get them to overlook the media short-term fears and stay the course?
I teach my students that fear is your friend. So fear in others is unfortunately what we take advantage of. So the volatility in the market is a good thing, not a bad thing. So when there's volatility, prices of stocks come down. That's when we're interested in buying, not when stocks are going up, when they're going down, right? So let's just take, recently we've got the trade war with, you know, Trump and the Chinese, right?
Yeah.
And every time, Trump tweets something negative, the market takes a hiding. And so even companies that have nothing to do with China, just because the whole market is dropping, their stocks drop too, right? And they're not really invested in China. But because the whole market becomes negative, and the market's made up of people, and when people's psychology changes and they really don't know what they're doing, they panic and sell stocks, and probably sell stocks at the right time, at the wrong time.
Yeah.
And then that's where people like myself come in and say, okay, well, if you want to sell Apple at $95 because, Warren Buffett, because Trump tweeted something, well, I'm happy to buy. And then, Trump tweets something positive and then the price goes up. It's all, the market's, it's around psychology. The market's made up of millions and millions of people around the world. And when you think about it, Bushy, the majority of those people that are invested in the stock market probably don't know what they're doing, right?
No.
A lot of them probably don't even know what they own.
No.
And so when they hear something on the news, like you said, or Trump, tweets something tonight, that's negative, everyone panics. And so we, who are knowledgeable, unfortunately, we take advantage of people that are in fear.
Yes.
And that's how we get a cheap price.
Yeah.
So we have to overcome our fears because we're taking advantage of others in their fears. And that's the perfect time to buy.
Yeah.
Going back on compounding, I just wrote something. If I was, my son's 19, right? So if I said to him, look, let's just start, think about compounding. Let's just start a little fund for you. Let's just put some numbers together, right? So if I was to say to my son, look, just say you could compound your money at 13%, right?
Yeah.
And let's just say you started with $40,000. And let's just say that you're going to be committed and each month you're going to put in $1,000 a month into this investment plan, right?
Yeah. And
if my son did that for 25 years part-time, just on the side, just chipped away, he's 19, so he'd be, 40, 44.
Yeah.
It would turn into $3.3 million.
Yeah. Yeah.
Right?
Exactly.
At 44.
Yeah.
Now, let's just say it's not, he can't compound at 13, he compounds at 12. It'll probably be about $3 million.
Yeah.
None of these numbers are wrong.
No. Well, even at 7.2%, the value of your investment is going to double every 10 years. So,
well, I just said before that the US market has gone up 10% on average per year over the last 60 years, right? If you include the dividends, right?
Yeah.
Even if my son just bought the market, just say he bought the S&P 500, which is the top 500 companies in the US, he could buy a product that has those, and he didn't have to pick stocks for himself. He just accepted the 10%. The figure would be $1.8 million.
Yeah.
Bushy.
Yeah.
None of these numbers these are all pretty good numbers for. And so the question becomes, Does my son leave his 40 grand in the bank and earn 1%, which then he'll be taxed on the interest and probably earn 0.75? Does that make sense? Or why would you not buy the S&P 500 and accept the 10%?
Spot on. It's a no-brainer.
Why would you just?
And particularly when that 1%, if you take off what inflation is doing, which sort of varies between 2 and 3% generally, then you're actually going backwards, leaving it in the bank.
Well, the power of your money is going backwards. And guess what? They're talking about in the future negative interest rates. What that means is probably in the future we'll be paying the bank 1% to have our money. At the moment, they're paying us 1%. In the future, they're talking about we paying them 1% to actually for us to put our money into the bank.
Do you think that's going to happen, John? Do you think that's realistic?
In the US, they're talking about it. I don't know about Australia, but what really upsets me, Bushy? No. Why are the banks public companies? Why are they there to make money? So the bank, say my son puts in, $40,000 into the bank gives him 1%. What the bank does then, they ring me and say, "Oh, John, you applied for a car loan. We can give you the money for 14%.
Yeah.
Right?
Yeah.
So they take my son's money, give him 1%, and then lend that money out for 14, and they make 13%.
Yeah.
And that's what you should be doing.
Yes.
Why should the bank be making 13%? That's where, my son should be doing. He should be making 13%.
Yeah.
And so tomorrow when you pick up the newspaper and says NAB Bank made $4.5 billion, how do you think they made it?
Yeah.
By using your money and paying you nothing and then lending it out for 14, 15% and making the 13 themselves.
Yeah.
And I think that's a crime.
Absolutely.
That doesn't cut it anymore.
No, I absolutely agree. Absolutely agree. Mind you, in the early days, leveraging, using the bank's money, providing you're doing your homework on the right sort of asset can work in your favour. It's just a matter of setting it up in a way that's minimising the risk factor. But, John, I'd love to sort of delve a bit deeper now into, let's say I'm someone who's feeling like I'm trapped on the treadmill. Yes, I've got a little bit of money in the bank and I've been putting money into super, and all I've been doing is just sort of chipping away at the home loan, thinking that that's going to get me to where I get to. If someone was to say, well, yeah, I don't know much about this share thing, but John, can you help me? How much money would I need to have in the kitty to get started and last the distance? And what would you take them through to get them started in that exercise, John?
So if you're talking about Project My Profit, which is my online program, I created 10 modules. In each of the modules, there's probably 10 or 12 little videos, and each video is on a topic. And each video is probably about 15 minutes each.
Yeah.
People watch, say, module 1 for a week. And then the following Monday or Tuesday night, we have a Zoom call, a Q&A Zoom call. So my students jump online and they can ask me questions about the modules. I'm in front of a whiteboard and we go over the module we just did. And then they have lifetime access to a private Facebook page with me. So they get lifetime access to me after they've finished the 10-week course. When it comes to money, I tell everyone that everyone's at different levels. You can start at 10,000 or 20,000. Everyone starts at a different level. And it's irrelevant where you start, because all we're trying to do is compound our money at the highest rate. So I help people set up from home. I use ComSec, and because I trade in US stocks, which really are international stocks. That's where all the big, great companies sell their stock on the US market.
Yeah.
And so ComSec You open up a CommSec account for yourself from home. CommSec link it up to, you have a US account that's linked, and that US account has your money in US dollars, and then your US account is linked to the stock market, and then you buy and sell. So in the private Wealth Builders, it's called the Wealth Builders Club, which is our private Facebook page, I show people where I get all my information from on how to buy stocks and what stocks to buy. There's 4 or 5, 6 fund managers that I follow.
Yep.
They send me their quarterly reports every 3 months.
Yep.
And they discuss their new investments. And when they write theses on what the new investment is, and it might be like a 4-page investment thesis on why they think it's cheap and why they feel like they're buying $1 for 50 cents.
Yeah.
All my course does is teaches everyone the philosophy and the fundamentals, and to be able to read all these investment quarterly reports and understand the terminology and have a philosophy on how we can build wealth investing in the stock market. You know, we're using the stock market as the vehicle because at the end of the day, we just want to compound our money and grow it to becoming wealthy. And we're just using the vehicle is the stock market. And I tell people, especially my students, we don't borrow any money. There's no borrowing of money, so we're not leveraging. We're just starting with whatever pool it is, and we're building on it. And it's long term.
Yeah.
And the beauty with investing in the stock market, I'll say compared to property, is that it's liquid. If you're compounding this money, and just say something happens and you really need to take the money out, you know, it can happen overnight, bushy.
Yeah.
You know, it's a liquid asset. You can get, you know, you can have your money the next day if something really happens and you need your money, you know.
Yeah. Yep.
So, you know, for me and my brothers, you know, we've been able to source out 3 or 4 fund managers that we follow religiously, and every quarter they send myself their quarterly reports on what their top 5 holdings are and what new investments they've made and what the thesis is for going forward. You see, if a price of a stock, bushy, is $5, what's the catalyst for it to go to $10? There has to be a story behind why is this stock going to move.
Yeah.
And the people that I follow are searching the market, you know, in the corners of the market where some of these companies that might be mid-cap companies, not many people are following. Because news these days is instantaneous, you know, like, for example, Apple. If Apple did something, within 3 seconds, the world would know about it.
Yeah.
There's certain companies in you know, sort of mid-cap companies that people aren't following. And so the people that I follow are searching for these companies where there's no news out there. Something's going to happen. There's a catalyst, but no one really knows about it. And so these people are looking for companies that have a catalyst or there's an event about to happen that's going to move the price of the stock. And that doesn't happen overnight, right? So like you said before, in business, you know, if I had a cafe and I wanted to change the menu, it's not going to happen tomorrow. It's a process. So if we're looking at a stock and there's a catalyst about to happen, we have to wait out for that to happen. And that could take, you know, 3 months, 4 months, 6 months, who knows, you know?
Yes. Yeah.
And we're searching for companies where there's not much information out there about what's happening.
Gotcha.
And that's where you get the edge.
Yeah, an unfair advantage there because it's not information that everyone's got access to. 100% agree, mate. A couple of things that in sort of doing some research around what you're doing, and again a subject that I totally agree with you on, which is at odds with what a lot of so-called market experts would talk about, is the fact that you feel that diversity can actually hurt returns rather than the other way around. Can you sort of expand on that a little bit? Because a lot of people think, oh yeah, I've got to minimise risk by diversifying. Talk to us around your thoughts on diversity and what is a reasonable position to take in relation to where you put your energy and your money.
Yeah, so in my course, one of the topics is diversity hurts returns, right? And it's something that I've learnt from Warren Buffett. And he says, why would you spend money on your 30th best idea and not buy more of your 5th best idea, right? And so it's funny how the math works, but if all I'm interested in compounding money and earning the highest rate that I possibly can, it actually, if I spread my money out too far and I buy 30 stocks and I only put 2% of my money into each stock, it's funny how the math says my returns will probably get diminished, right? But if I focused on my best 10 ideas and I put in, say, 10% of my money in my 5 best ideas and 5% of my money in my other 5 or 6 best ideas, my returns are going to be greater. There's no point spreading your money out to 30, 40 different companies and putting 1% in each, right? If you have conviction in your idea, so for me, I have big positions and medium-sized positions. So basically, I only have 10 to 15 stocks that I own.
Yep.
I will put, 10% of my money into my best 5 ideas, and then I'll probably put 5% of my money in my other, 6 or 7 ideas, and I'll always have about 20% in cash.
Yeah.
Right?
Yeah.
So I'm only ever owning between 10 and 15 stocks.
Yeah.
And I'm putting my 10% into my best ideas. So ones that I'm really convinced, I've got huge conviction on, right?
Yeah.
Rather than spreading my money thin. It's like saying, Bushy, do I buy 10 one-bedroom apartments in Shepparton, or do I buy one nice house in Toorak of Melbourne? Which one do I think is going to grow? So do I spread my money out in Shepparton, or do I buy the huge house in Toorak? Which one do I think is going to grow in value? For me, it would be the Toorak house, right?
Every day of the week. Yep.
Well, there's no point buying the 10 in Shepparton, right? So if you've got conviction in your best ideas, you plonk your money, your 10%. So another topic in my course is called weighting. So how much money do I put into my stocks, right? And it's 10% for my great ideas and 5% in my good ideas. And that's when I say 10%, it could pan out to be 9.5%, but roughly that's how I spread my money out. And I always have around about 20% in cash. So whenever the market turns and Trump tweets something negative, I always have cash there that I can use to actually buy something cheap.
Yeah, and because you're not leveraged, you don't have the margin calls or any of the exposure that goes with the volatility of the stock market, which is an important thing. And
we just plain vanilla. We don't borrow money. We just buy equities. And the other thing is, I teach my students about a watch list.
Yeah.
A lot of the times, you might like a stock, and it's not at the right price, right? So we create a watch list for ourselves. So on a big whiteboard, I have my watch list. And stocks end up on my watch list because I like the company. I want to own the company, but it's too expensive. So it goes on my watch list, and I put a price that I want to pay for this stock.
Yep.
And it's a reminder. So I look at my watch list every day. because I won't remember all these things, right? So it goes on my watch list, and every day, Bushy, I stare at my watch list, and I look at stocks and see where the prices are compared to what the prices are on my watch list.
Yeah.
Sometimes on my watch list, Bushy, there's stocks that have been there for 3 or 4 years that I've never been able to buy because they've run away in price and they just stay there. You know, maybe one day they come back. But, for example, during this period with the Trump-Chinese, tug of war, probably in the last sort of 6 months, I've probably bought 4 or 5 stocks that were on my watch list that I couldn't buy before.
Yeah.
So when the price dropped to the price that I wanted to pay, I quickly researched the thesis again to make sure that the thesis is still there, and then I bought the stock.
Yeah.
And that's the sort of thing, I teach my students.
Yeah, brilliant, mate. So sort of coming back to your personal situation again then, and what I'd love you to sort of paint a picture for us is what does your ideal lifestyle look like? And it may well be the lifestyle you're living now, but sort of put some colour and shape around that for us. And then talk to us around where your portfolio is at. What does it look like in terms of shares, in terms of property, and what is that doing towards funding that lifestyle both now and ongoing and creating a legacy for your family? Can you put some shape around that for us?
So my lifestyle now is I invest full time. So I'm sort of semi-retired. So I sort of consider myself, sort of wealthy because I have time to do whatever I want to do.
Yeah.
I every day I just do what I feel that I'm passionate about, which is investing. So I've got to a point now where I'm sort of semi-retired and wake up in the morning and decide what I feel like doing today.
Yeah.
And the majority of the time I'm looking after my family fund, which is investing, and that just takes up doing research. So I spend maybe 3 or 4 hours a day just researching and reading. So in the mornings I'll go through the internet. There's certain sites that I follow, and I'll print out some of the articles that I want to read.
Yeah.
I end up with about a stack full of things that I want to read for the day, and I focus on just building my knowledge and investing for my family. And the beautiful thing is that I have the time to do what I want to do. I've been able to put myself in that position. Going forward into the future, I think the only thing is that my daughter's 13 now. What I'd really like to do, Bushy, to be honest, is I'm from Greece, so I wouldn't mind buying a little shack on the beach, on one of the Greek islands, or even on the mainland where my mum is. She's from the beach.
Yeah. And
maybe spend 3 or 4 months of the year, especially when it's winter here in Melbourne, to spend in Greece.
Nice.
That's down the track. My daughter's still 13, so I've got to wait for her to finish school and sort of.
Yeah.
But
and what's funding that lifestyle, mate? Is it a mixture of what's coming out of the property portfolio plus the dividends from the shares? Can you sort of share a little bit with how that's being funded?
Yeah, so I've got business interests outside of. So I have interest in a prestige car showroom with a business partner. So the other thing is I invest in people too, Bushy, and I invest in their expertise, right? I know nothing about cars, but my friend and business partner is an expert, and so I've invested in the showroom. I've invested in a small boutique souvlaki bar here in Melbourne with another business partner. So these things bring cash flow to me every week without me having to commit any time. And my fund and my family fund does really well, so that contributes to my lifestyle. And Project My Profit with my students, I run programs with that. So I think like I said to you, I think we talked about off air that most sort of wealthy people, end up having, 4 or 5, 6 different income streams coming in, And like for me, that's sort of something that I'm creating. I've got some property that I get rent from. So all these different income streams coming in gets me to be able to just right now lead the lifestyle that I really want, and that is to have the time and the freedom to do what I want.
Yeah, and that's the ultimate goal for all of us, because time is the limited resource. So if we sum that up into what you believe are the secrets to long-term sustainable success, how would you sum that up for us, John?
Learning how to compound money, being committed, and taking it seriously. And it's a long-term journey, and you've got to be committed. To be wealthy takes commitment and courage, and perseverance. So, I think anyone can be wealthy, Bushy. I really, really mean that. It's just that they need some guidance, some commitment, some courage, a philosophy, understanding the fundamentals, understanding the maths that we talked about, how the world's really working against you, and then to have the courage to do something about it.
Yeah, beautifully said, mate. Beautifully said. Yeah. Mate, jumping into the ambush round, which I normally get everyone to machine gun dance with 5 quick questions that the listeners always like to get your wisdom on. If we sort of kick into those straight off the bat, what's your favourite quote and why?
I think you mentioned it before, compounding is the 8th wonder of the world.
Yeah, it is a cracker. Yeah. No, it's Einstein was a pretty bright guy, and if he felt that, that's a pretty good recommendation.
I wish people would just take it a little bit more seriously,
Yeah. Well, I think as you've well said, because everyone's short-term these days, they're not even thinking long-term. And that's something I didn't ask you. We all talk about long-term. What is long-term to you? What sort of a horizon are we talking about?
Long-term as in owning a certain stock, or long-term as in, for me, Bush, because I've always been a long-term thinker, for me it's like forever, So me investing, I can see myself investing till probably the day before I pass away.
Yeah.
It's a passion, and I'm committed to it. And I don't feel like it's a job, Bushy. It's something that I really, really, really enjoy doing. Yeah. And I'm learning stuff every day, and it just means that I'm growing every day. And that excites me, because even though I'm 55, there's so much more I can learn. And I am learning every day. And to me, it's a pastime. Investing is a pastime now, and a passion. It's got me to where I am today. But I can, I don't feel like it's a job. I mean, I go to Bali, every year, and when I go to Bali, I'm sitting around the pool, and I can still invest if I want to,
Yeah.
So I can travel with it.
Yeah.
I can sit around the pool with it. I can see myself investing till probably the day before I pass away.
Yeah, I love it. Mate, let's turn to the written exercise, and you've read a few books over your time. What's the top book that you'd recommend listeners grab a hold of, and why?
I'm not sure if you've read it, but it's called The Snowball.
Yes, I have.
Warren Buffett and The Business of Life by Alice Schroeder. It's about 850 pages. It's a massive book, but it's the life of Warren Buffett, and it's books like this that really resonate with me, and like how he made investing sound so simple, the whole philosophy.
Yeah.
And so I know it's a large book, but it'd be good for people maybe just to grab a hold of one and just, to start with, understand, how Warren Buffett and how he thinks and how he got started, and what are his main tenets in life,
Yeah.
It'd be a good way for people to start to learn about investing, for the long term.
Mate, we're both big fans of Warren Buffett, and I know you've published an ebook that really sums up some of his key quotes. Can you share a couple of those, some of the quotes that really ring large in your mind that you think the listeners would be interested to hear?
I'll give you one. Be greedy when everyone else is fearful, and be fearful when everyone else is greedy.
Yeah, love that.
As long as you understand that, I think you're 50% of the way there. Yeah. Meaning, when the market's going down, and people are fearful, that's when it's time for you to be greedy. Yeah. And when people are being greedy and they're buying stocks because it's, there's euphoria in the market, that's when it's time to be fearful. As long as you remember that quote, you're sort of almost halfway there.
Yeah, one of the ones I love that's allied to that one is that wealth is a transfer of money from the impatient to the patient.
Yeah, exactly. Well, it's exactly. We spent probably the last hour talking about exactly that.
That's right. It's exactly right. No, that's a cracker, mate. No, one of the other things that the listeners love to get guests' thoughts around the top things that you've legally done to minimise the tax you pay, mate. Can you share with us your lessons around that?
So I created a family trust, and what that means is I can spread out the profit that the family makes amongst the family members, and that brings down the tax rate that I have to pay. Yeah. And so creating a family trust, a company family trust, is what we did, considering the position that we were in. And that way, whatever profit the company made through the family trust, we can distribute the profits individually to individual people, and the tax rate comes down.
Yeah, they're great vehicles, mate. Absolutely agree. Mate, coming back to the investment subject, what's the worst and the best piece of investment advice that you've ever received today?
I think the worst advice I've ever received is when someone tells me about a stock that they know nothing about. When people come up to me and say, "John, I've got an idea. Someone told me about this stock," and then when I say, "Well, what is it? What does the company do?" They have no idea. So that would be my worst, when I get people who know that I'm in stocks come up to me and say, "I've got a tip," right?
It's a bit like the Melbourne Cup, mate. So when someone comes with a tip for the Melbourne Cup, that's about as valuable as the advice you've just got.
And I think the best advice is, again, the one I just mentioned, was be greedy when everyone else is fearful, and be fearful when everyone else is greedy. I think really sums up when you should be buying stocks and when you should be selling stocks, basically, in a nutshell.
Yeah, no, very well said. Mate, coming back to personal habits, because let's face it, it's the things that we do day to day that accumulate over time to create that compounding result, and whether it be investing in shares, putting into your business, your relationship with your wife and your family. What's a personal habit that you believe that contributes most to your investment success?
Committing myself to learning more every day, every single day. So every single day, I'm a voracious reader, and I want to build up my knowledge base. So my commitment to learning more on a daily basis is something I think that helps with my success in investing.
Yeah, very good advice. Now, just to sort of bring it all to a good summary in terms of advice for someone, and let's take your daughter, for example, that you've mentioned, who's currently 13. She's going to be leaving school in a couple of years' time. What advice are you going to give to her in terms of where to invest her time, money and skills to create her version of freedom?
Well, to start understanding how really the world, the maths, we talked about before, Bushy, about the maths and how the world really is working against you from being wealthy. So I think we've created a society where you actually leave school, and the plan is, the whole education system's about teaching you how to become a good worker, right? How can you get a good job? And it doesn't teach you anything about entrepreneurial stuff, right? And if I take my daughter or even my son's case, he's just left school, and when I think about it, I probably spent, $100,000 in education, and he's really unaware about a lot of the things that, he's about to face the world, and he really is not, he doesn't have the tools to actually face the world, right? He didn't really understand, what a credit card is and what are the ramifications,
Yeah.
And so I was a little bit disappointed because I say it as a bit of a joke, but, like if you asked him what the population of Mongolia is, he could probably tell you. But if you asked him about a credit card and what happens, he couldn't tell you.
Mm.
So I've had to take over and educate my son on the financial aspects of life and some of the hurdles, A lot of the young kids now, Bushy, aren't equipped to face the world. And that's probably where they're most vulnerable, is in those early years where they're going to make some major financial mistakes that are probably going to cost them the next sort of 5 or 10 years of their life trying to fix.
Absolutely dead right.
And so,
yeah.
Talking about young people, can we get to these young people and just give them some tools before they face the world? The basics of don't do this and don't do that, because if you do this and you end up in debt, it could cost you the next 5 or 6, 7 years. And when we're talking about compounding money, if we can get these people to just, young people to, to not make these mistakes and teach them about compounding money at an early age, the world's their oyster, really. There's no way that they can't be wealthy. But it's those first few years, Bushy, where they're going to make mistakes because I don't believe our education system's given them the tools to face the world.
Mm.
Even when you go to uni, think about university, Bushy. There's a HECS debt now.
Yeah.
Getting a degree is like $40,000.
Yeah.
How many kids finish the degree and end up with a job in that industry?
Very few.
Very few. So you paid $40,000, you're minus $40,000, you're 20 years old, and you end up making coffee in a cafe.
Yeah.
And it's a double whammy because you got a $40,000 debt and you're a low income earner.
Yeah,
it's a double whammy. It's a double whammy now.
It's interesting you'd say that, mate. I actually talked my son out of going to uni because I went to uni myself to become an architect. But my view on uni is unless it's you're pursuing something that's passionate that actually has a long-term potential at the other end of it, don't bother. Just get out there amongst the world and you'll get a far better education on how the world works by getting your hands dirty than you will spending 2, 3, 4, 5 years insulated in a university degree.
I was in the cafe industry and, so many kids that would finish uni would end up coming and making coffee in my cafe, right?
Yeah.
And it's a double whammy because now they've got this debt over their heads, which is now going to take them 5, 6, 7, 8 years to get back to square one. And unless, so I try and advise people that unless you're passionate about the course that you're doing and that's going to become your lifelong dream to become, whatever you want, then, but if you're just going to go to uni and just cruise along and think, I'll just do this course because, there's nothing else to do, you're making a huge mistake.
Yeah.
It's going to set you back,
Spot on. Very wise words, mate. Look, you've been extremely generous with your time, John. Really enjoyed the chat, mate. There's a lot of subjects that we could talk more in a lot more detail, and I'm really looking forward to catching up with you at the Wake Up Adelaide conference on the 21st and 22nd of November. I really encourage those listeners to jump on board with that because that's going to be a life-changing event for those that recognise that there's an opportunity. As John has well said, anyone can become wealthy if you follow the right principles and take some action and have the courage to make that happen. Mate, really looking forward to meeting you face-to-face at that event, and very keen for those that are listening and have an interest in learning about the market to get in touch with you through your business. So
yes.
Project My Profit. So thanks again for your time, mate, and looking forward to catching up again soon.
Thanks, Bushy. Thanks for the time.
Well, freedom fighters, how good was that? To get a summary of all this investment gold in the show notes, just email me on hello@khgroup.com.au. That's HELLO@khgroup.com.au. Or check us out at www.bushymartin.com.au/get invested. I look forward to joining you next week for another episode of the Get Invested podcast. So thanks for listening, and as always, dream as if you live forever and live as if you'll die